Hello and welcome to Follow the Money. I'm Robert Tan. Here we uncover the stories and strategies of how money really moves. Today we focus on the Philippine market, the volatility, the risks, and the real opportunities shaping investor sentiment this quarter. And joining us on BNC's Follow the Money is Cristina Ulang. She's research head of First Metro Investment Corporation, to break down market moves, policy signals, and what Filipinos should do to build smarter, stronger portfolios. Good afternoon, Cristina. Welcome to the show.
Hello. Good afternoon, Sir Robert. Happy to be here.
Okay, Cristina, let's dive right in. Now, the PSCI has been swinging hard this quarter. Now, is this normal market noise, or is the volatility telling us something deeper about investor confidence today?
Well, the PSA is very much driven by a lot of noise, a lot of uncertainty, a lot of nervousness, and not really by fundamentals. Because if you're going to look at our growth prospects, we're still in the growth territory for next year, growing by like in terms of GDP, 5 to 5% next year. And I think that's very good for us still. We're able to remain resilient. So this market is not paying attention to that. If you're going to look at the 9-month corporate earnings, is 10% up for the 30 company PSA members, and yet the market is has been hovering like even touched 5,500 last November 14. But it seems that the foreigners are starting to come back. $51 million, 7% up, has been very supportive of PSA, 7% up, $51 million inflow. So this is really driven by speculation and a lot of trading tactical moves.
Now, Cristina, you mentioned that foreign investors are slowly coming back in, but are they still selective with Philippine exposure? And what do you think are the real bottlenecks? Is it policy risk, market depth, or our economic narrative?
Well, you know, the economic prospects, the growth in particular, and how government is going to shape that growth, that is what at stake. That is what where the uncertainty lies. So investors are trying to figure out if government infrastructure spending is going to be constrained. And we know that the 2026 National Expenditure Program is indicating that there's going to be a 460 billion reduction in infrastructure. Then what will happen to our growth prospects next year? So that is the main question. And a government is communicating that to offset that slack, they're going to spend on social services. So the question is, will that fully compensate for the reduction in infrastructure spending, knowing that it has multiplier effects that benefits all industries in the Philippines, and then even employment opportunities are very much tied to construction activity. So there's really a lot of cloud with respect to our growth prospects given the uncertainty with the budget expenditure for next year, specifically infrastructure. So I think the strategies are shifting when it comes to equities. It's really more of defensive play, trying to hedge against uncertainties, and fixed income really is the emerging winner.
Now, Cristina, if we look at retail investments, many Filipinos chase momentum and hype. Now, in a market that's thin, how dangerous is this kind of behavior, and what smarter habits should Pinoy investors adopt today?
Well, you know, if you don't have the holding power, if you do not have excess money to invest, then please don't invest in equities. Because equities is really very volatile. Now you may be catching a falling knife. You should be able to wait and really be patient when it comes to investing in equities nowadays, because it is not a sustained rally. It is not a very definitive trajectory of upward, similar to the US. The US market's very easy, but the Philippine market is the most challenging and difficult now because we're facing a lot of headwinds politically, and some uncertainties when it comes to policy also. And so I think the strategy must really revolve about being able to know if you have the holding power, you have excess cash. And when it comes to spending, I think we should be living within our means. Try to save, and invest in companies that we really know and we think could survive and would remain resilient and profitable, notwithstanding the headwinds that we're facing.
Now, Christina, when we look at the business community, when we look at investments, there's always this phrase that they keep on saying, buy low, sell high. Is this the right time?
Well, we don't know the lowest. That is the trick in the game. Nobody knows when is the trough. 5,005, yes, we hit already and we're recovering. That seems to be the lowest point. So the question now, as you have said, would we be investing big time? Maybe we can accumulate in the safe names, the big conglomerates, the ones that have the liquidity, and you'll be able to exit when you need to get out of the asset class. And I think you should also be looking at technicals as well as fundamentals and be very, really careful. And you should have excess cash really, because that is the one that will enable you to have the patience to hold on, because this is a long-term game. Now, when you are doing it, trading, then that is where the pitfall lies. And I think investors must be wary of getting in and out of this market, because it's very highly unpredictable. And I think for safety of especially beginners, they should be investing in fixed income instruments with the safety and the guarantees of coupon.
Now, based on your the local setting, your investment and observation, are we seeing now a momentum on the positive side? And do you think that will continue until next year?
Well, the sustainability of this recovery, we're seeing a nascent recovery now. We're not yet out of the woods really, because governance-wise, more reforms and more needs to be delivered on the social justice side, and of course, a reform when it comes to the budget process. So I think those two areas need to be addressed. And until the investors are able to see really big changes and moves forward, then that's the only time that we can say that the market is developing the conviction to really invest big time. But right now, there are a lot of news. The developments are very unpredictable when it comes to the governance side, the remedy to this flood control scandal. People are on the wait for results and for social justice and for changes in the way the budget is going to be handled going forward. So I think the important thing really is to see the inflection point, to identify the inflection point. And I think that is going to come only when things become clearer in terms of the delivery and what is expected of the government in terms of social justice and in terms of budget reforms.
Do you see that in the near future, or again, do we have to wait a little more time for that to happen?
Well, I think government is doing it in the fastest way possible. We've heard of case filings being done by the ombudsman. More will happen, more exposés are going to happen, and that's going to also test the nerves of the market. It's not going to be a one-way upward trajectory. There will be tests and bumps, and we don't know the twists that are going to happen along this journey of ours with regard to the flood control scandal. And that is what makes the market very tricky. So it may be a prolonged affair, it may be a fast one, but it's going to really, really be a bumpy one.
Now, we see some positive things happening, like in terms of bond yields. We've seen it climbing again. Now, for the ordinary Filipinos, is this the perfect window to lock in long-term bonds, or is it still too early to commit?
Well, the upside is the much-awaited BSP rate cut next month, because the BSP has communicated earlier that the economy is slowing down, especially the demand side. And when that happens, they usually try to introduce some stimulus measure, and that comes in the form of a rate cut in the policy rate. And so that may happen by next month, and that is going to create some more upside and mileage for the prices of the fixed income market, which means yields are going to go down. So that's going to be favorable in terms of the price appreciation. And while you are able to realize that, there is also this hold to maturity feature that enables you to take advantage of the coupon, which is still very high for the long end. For the 10-year, it's 6%. For the 7-year, 5.8. For the 5-year RTB, the one that was floated last August, is still very healthy, yield to maturity of about 5.4. In fact, the yield curve has rallied already, going down and benefited those that are trading. But still, the long end of the curve is very attractive. The 10-year, the 25, the FXT in 2023, and FXT in 2025. So it's still very rich in terms of the yield. And going forward with the Fed cuts also complementing the BSP rate cuts, then we have more upside going forward. So we can still lock in now, still very attractive in the long end. That is if you are able to really lock in 5 years, 10 years. But this is a very liquid market. You can still get out. Even if you lock in at 5, you can get out.
Now, Cristina, how can we communicate this positive outlook to the new investors here locally because we see most Filipinos do prefer savings accounts over the markets. Now, if you would look at it that way, what's the one financial myth that we urgently need to break to improve financial literacy and communicate this better to the public?
Well, in First Metro and in Metro Bank, we usually do economic briefing. So I think that's the beginning of the learning process, attending all of these financial literacy forums, symposium that enables you to have the familiarity with regards to the economy, how the economy moves, and how the fixed income market and the bond yields move in tandem with the economy, and how the risk asset like your PSA members, the conglomerates, the food and beverage, and all of those move in sync with the economy or out of sync with the economy. So I think it's more about learning and really desiring, having the mindset to learn. I think that's the most important thing. If we don't have the mindset to learn and to be vigilant about day-to-day events, trying to make sense of the day-to-day events, then there is really no shift or no change that's going to happen. So I think it's important to communicate for us, like those in the capital markets, to awaken the interest and to seduce to seduce the youth and the investors into the wonderful world of amazing world of capital markets and investing. So it requires creativity on the part of the communicator like us, like in First Metro and Metro Bank. So I think that's the challenge for the people in the capital markets, really to seduce the investors.
Cristina, we still have a lot to discuss. That's a lot to unlock, but we'll just take a short break. Follow the money. We'll be right back. Welcome back to Follow the Money. Still with us is Cristina Ulang, Research Head of First Metro Investment Corporation. Now, Cristina, we were talking about before the break about how to create more awareness, to educate more investors. Now, if we look at now to try and get the younger generation to get in on the action of the capital markets. Now, let's say if a 25-year-old Filipino earning 25,000 pesos today asked you how to divide their money between stocks, bonds, and cash, what allocation would you recommend and why?
Of course, we need to have safety in this kind of environment. So save in terms of fixed income, short-term, maybe short-term, 1 year T-bills would be a good starter. Graduating from time deposit. So introduce a little bit of sophistication and then go for T-bills, maybe starting with 3 months and then half a year and then 1 year and then maybe eventually when the pot goes higher, then we can introduce longer term instruments, and then maybe also time deposits that are for longer term but gives you monthly cash out, because there are time deposits like that coming from the banks that are giving one-time issuances that are giving you a monthly coupon, monthly cash out. And also there are a lot of corporates that have issued SM Prime, Toyota, AEV, San Miguel. So there are a lot of names in the corporate world that will issue. And if you have the minimum, if you have saved enough to have the minimum requirement, investment required, then it's time for you to graduate from T-bills and then diversify towards corporate issuances. You'll be helping the corporates and learning at the same time.
Now, Christina, uh, we are in the digital age. Technology has allowed now easier entry into investments. Based on your research, do we see it really easier to invest with the advent of technology? And do we see the younger generation looking into that now and easier to get into more of the investments locally on the bonds and in the stock market?
Mhm. But I think it should start with the school. We should add a subject in the school curriculum that will introduce the young as early as because some high school students are being introduced into the world of accounting, bookkeeping. So why not introduce them into the world of business, inclusive of the investment? There should be a subject in college about investment. But right now, what I know is that it's for graduate courses for the MBAs. But I think the awareness should start when you are really in school, and then when you go out in school, you already have the mindset. You start saving, and then you start investing. And given the digital age, we have e-wallets that provide outlets for investment. We have GCash. We have digital banks that offer the many avenues and the many investment opportunities. We have also the banks themselves are able to assist people who want to participate in fixed income, small issuances, like in small denomination, the RTBs. We have the bonds.com, we have land bank, and all government like Pag-ibig also has its own high yielding instrument. You can place your money there. So I think it's a matter of like being there, having the mindset, and digesting all of this information around you, being curious,
Yes.
and having also the educational system become more attuned
Now,
to the world of capital markets and investment.
Now, having said that, Christina, do you see now, is the business community now actively taking part in terms of communicating with colleges, universities, not just in graduate schools, in terms of, again, yes, try to get this information, this education to the younger generation? Because we've been through it during high school, even college. We weren't really taught much about financial literacy. Well, yeah, in graduate school, yes, but even then, not that much.
I think exposure is very important. We should have people who are championing investment literacy, financial literacy in the corporate world, reaching out to the universities and the campuses, making rounds. I think there should be a close coordination between the private sector and the educational system, the government, both, and even the LGU should be involved, going to the barangays, making rounds, and telling people how to manage their finances, because it starts with that, and then trying to build up their confidence when it comes to saving money, and then allocating a portion of their income, developing the habit of sleeping within your means, and then without necessarily depriving yourself, and then have that attitude, introduce a new way of looking at the world around you when it comes to financial, like for instance becoming more frugal. I know it's hard,
It's hard.
becoming more frugal, and
Especially now, Christmas time,
exercising
no,
more
Christina?
self-control, because it's really behavioral. It's a behavioral and psychological thing. So we should start really with the individual, and then we should have success stories to inspire people that should be there, highlighted in media, and then in schools also. These people are being brought to the school also. If that can be done by a religious organization, they're doing inspiring people spiritually, why can we not do the financial literacy in the same way? Then we will have a almost a cult-like following.
So
We can develop
you really think
that.
now in the traditional schools today, it really needs to have that kind of curriculum embedded in the system, even as early as grade school.
We should introduce interesting games for even kindergartens about money, about how to increase the value of money, maybe tap our creative gaming in order for children to really take time to be introduced to the world of money, finances, without really introducing gaming, no? Because gaming is different than gambling. So
Oh.
it's all about
There
developing
has
their
to be
character.
a
Yeah,
line.
their character when it comes to hunting money, how it grows, what makes a successful investor. So it may be like a small game for the kids in
Yeah.
school, so
Yeah.
that when they grow, it is imbibed in the process of their growing.
That's true. It's very important to really learn it as early, not late in the game na parang, oy, sayang, we could have done this before. We could have not made the mistakes at a younger age if we knew at an early age what it takes to be financially stable, how to invest. But sometimes, yeah, late in the game na eh, even during our time.
Yeah, it's really something that must be done during the formative years. We're underestimating the capabilities of the small children when that will be better absorbed during the formative years in elementary, in even kindergarten, through plays, and then games, and then in high school more advanced, and then college. So when they start earning money, then they have already developed the mindset to save and invest.
Now, Christina, now if a Filipino wants to hit their first million peso through investing, what kind of mindset shift do they need to have that will separate them from disciplined investors from emotional ones?
Well, the disciplined investor has a goal. I think goal setting is very important. And when you have a bonus, you don't squander your bonus. I think the bonus must go to investing. And then that is really the one that's going to beef up all your reserves or your cash position. And then you should be able to also forgo some of the luxuries for yourself.
Oh,
It's
very
really a
timely.
difficult thing
Christmas
to do.
time pa naman ngayon na, Christina. Padating mga bonus. So,
Yeah, but everything is possible when you have a budget and a mindset and the discipline. So I think those three are important. You should have a budget, and you should stick to your budget, and then have some portion for the saving, and then invest the saving, and believe in the power of compounding. Listen to the videos of Warren Buffett and Charlie Munger because they have become rich by investing. Of course, the setting is different. It's the United States.
Yeah.
That the Philippines is a trickier market, difficult market, and so you must
But it
have
can
a
still
greater
work.
discipline.
but it can still work, right? Here.
It can still work with the proper allocation, more towards fixed income and less on equities, really during times of difficulties.
Okay, Christina, you've done this before. We'll go to the rapid fire questions. Just answer yes or no. No need to explain your answer. Let's start with this. Is the Philippine stock market undervalued right now? Yes or no?
Yes.
Okay, should
Yes, very much.
should first-time investors buy bonds before buying stocks?
Buy bonds.
Now, will inflation stay within the government's target next year? Yes or no?
Yes.
Is today a good time for the Filipinos to start investing more aggressively?
No.
No. Do you expect at least one interest rate cut within the next 12 months? Yes or no?
Yes.
And complete the sentence. Let's see if you've changed your mind from the last time. Money is the root of all.
Good.
Yeah. It's good to stay positive. Christmas pa naman. Oo.
Yes.
Well, it's good. I like what you're saying, that we really have to start the financial literacy at a young age. And hopefully if the schools do listen to that, and the business community communicates that, we'll be able to do that. Thank you, Cristina.
Sure. Thank you. Bye-bye.
When markets turn uncertain, investing becomes less about noise and more about discipline, strategy, and staying grounded. As Warren Buffett once said, when investing, pessimism is your friend, euphoria the enemy. And when markets move the way they have this quarter, it reminds us that volatility isn't just noise, it's a signal. Today's conversation with Cristina Ulang laid out the real forces shaping Filipino investor behavior, from foreign fund flows and policy risks to the habits that make or break growth. And as global pressures continue to test our economy, the challenge for every Filipino is to stay informed, stay strategic, and build a portfolio that can weather both the surprises and the cycles. And before we go, it's 31 days till Christmas. I'm Robert Tan. Stay curious, stay sharp, and always follow the money.